letter from the IRS saying that you're being audited. Ooh, what goes through your mind at that point? What do they want? Why did they pick my return? Do you even know what to expect? How to prepare for this audit? Well, you're in the right place right now. We're about to answer all those questions and more. Let's get into it.
Hello, and welcome to another episode of Cigars and Taxes. Your host, Layton Smith, my partner, Stacey Hoffler-Smith. We're partners of Hoffler Smith Financial. I have offices in Cherry Hill, New Jersey, and Waterbury, Connecticut.
Yes.
And today, we are going to talk about what to expect. What's the name of the episode today?
IRS audits, what to expect and how to prepare.
We are in my realm right now.
We are.
That's it. We
are.
This is what I do.
Mm-hmm.
We have an accounting firm in Jersey primarily, and we help many, many clients with issues of representation. That's one of the areas that I focus primarily on. So IRS audits, state audits, payroll tax audits, collection issues, the old IRS, more than $500,000 about to come and grab you and your mama, stuff like that. Yes.
That would be us, and that would be you.
So we picked these topics off of recommendations that we're getting in on our emails. And, we've been getting all this cute stuff like, what do I do if I haven't filed in 2 years? What do I do if I haven't filed in 10 years? It's like, okay, we'll hit those topics. Now we got something good.
Oh.
What to do
Layton
when
is
you get
super excited about this. He was like, finally something meaty that I can dig my teeth into.
That's it.
Yeah.
And this is probably going to be the worst episode.
No, it's not. It's not. But we have found that we're going to need to sort of break and do a continuation of a couple of these episodes. Yeah. So this is like
we're going to talk today about what to expect in the audit, how to prepare. Mm-hmm. So grab your cigar, grab your glass of bourbon. Let's get ready. Oh, let's hit the most important thing.
What's that?
So we're in Somerpoint Cigar Lounge.
Yes, we are.
Steve and Jackie, love those guys. We got to do an episode with them in it.
We do.
Yeah.
They've been on vacation, so we got to wait till they're
they're always
back.
on vacation.
I know.
Living a good life.
That's good.
So basically, we're in Somerpoint Cigar Lounge. I have my favorite cigar lounge beverage in front of me. Triple Cask, Balvenie, year 12. Actually, I'm sorry. This is 14 Balvenie, Caribbean cask that we're drinking today. And we're going to pair that. I'm going to pair that with a Liga Privada Velvet Rat cigar. Full body, very good. For those that know, they know. Good stick. Stacey has her signature margarita there with the pretty green
lighter
torch.
I have a lot of nice
torches over there.
I do. I like pretty stuff.
What you smoking?
This is a Tabac Especial by Drew Estates. It is an infused cigar. As you may know, I like my infused cigars, and it has this is like a coffee. Yeah. Mocha kind of flavor.
Good stuff. Well, I really like that lighter. That's a really cool lighter.
Isn't it, though?
Yeah.
I love it.
I think I bought that for you, right?
Wow.
Yeah.
Okay.
That's it.
I should have.
That was the little tap on
look
the back
at that. That setup. Did y'all see that setup? Okay. Got you.
But we have got questions about some of the accessories we have. Mm-hmm. So that is makes that lighter.
Oh, what is it?
This is H. Upman. Mm-hmm. H. Upman. So these particular lighters come in what? Green, white, red.
Yeah. So I have a white one too.
The 3.
And I like that they're so
3 torch, nice.
Very nice.
That's it. Mm-hmm. And your V cut. So we've gotten questions on our accessory.
Oh.
So that's just a really shiny, cute V cut.
This is nice.
That's it.
Yeah, this is anything again, a little bit shiny. A little bit shiny from that. Look at that. I got my pen. So
why you got a pen out?
Because you know what?
Okay, never mind. So
Don't.
And for me,
Don't start with me.
I have all my Sigma blue. Beta Sigma. So, the Zycar blue lighter. I was asked what lighter is that that's sitting on the table. Zycar blue lighter and the Condor cutter, which is, I love this cutter. Wonderful cutter.
That's
Rare
not
cutter.
the one I got.
No. I got that cutter a little while ago. No, I'll bring the one that you got me.
Okay. Since we're kicking that out there.
Hilarious. All right, so I think it's time. We talked about what we're going to talk. We discussed what we're going to talk about today. We got our sticks. We got our drinks.
Yes.
Let's jump. Stacey's going to hit all the particulars. I'm just going to jump in with stories and procedures. This is going to be good. Let's do this.
The real stuff.
I ain't even say all that.
Okay. So first off, what is an IRS audit? Okay, you get this letter, and it usually is going to say your return has been selected for examination for the particular tax years that they indicate. Might be 1 year, might be 2 years, might be a span of years. But the IRS is looking at those accounts, those organization or individual accounts, to verify that the information that was submitted on those returns was submitted correctly. Okay? There may be a multitude of reasons why they suspect that it has not. And they're looking to determine if
They're
there's
just looking for verification. So
looking for
when those
money,
letters
too.
come out,
Yes.
basically, let's just say we had a cute one a while ago. Stacey picked up it was a Schedule A audit.
Yeah.
A young lady, was a nurse, came in, had a letter, and they wanted to review Schedule A items like property tax and interest, and I think the
Property
contribution.
tax and
It was just property tax and interest, right?
Yes,
And maybe medical. was on it.
medical.
So I haven't seen that in years.
Mm.
Okay, so basically, I haven't seen where they send out an audit and they're just picking up Schedule A items.
We have seen that before.
I mean, it's been a long time since I've
It's
seen
been
one
a
of those
few
get
years,
pulled.
but they also, I think the ones that I'm used to seeing are a little bit more obvious,
Right.
egregious errors.
Yeah. That's it. That's it.
It's like,
So with
Yeah.
this particular audit, the young lady came in the office. I think she was referred by another client that Stacey had, and they wanted to look at those Schedule A items. So Stacey brought it in to me. I looked at it, and the first thing I said was, "Oh, this is a damn setup." Okay, like there's no way in the world they're just looking at property tax, interest, and like medical.
Right.
There's wages missing. There's something else missing here. We're not seeing what they're actually going for. So I
Right,
told Stacey, I'm
right.
like, give her this outrageous number for taking this audit so that she'll leave. That was the goal, because like, I don't even want this audit. I don't want this audit.
which was not really, again, referral from a current client. So I was like, whatever.
So we gave her a bit of an outrageous number. It wasn't horrible, but it was probably double what we should have. But the goal was, we didn't want that audit, because I just figured there was something in the background that we don't see that was going to come and just punch us, right? So either way, young lady was just scared to death. And Stacey gave it a number. She left. Came back with the money. And Stacey with the money in a signed contract, a signed engagement.
And she got all of her documents in that I asked for. And we were able to run through it.
And we were just like, oh my God, damn.
Yep.
But fast forward. Now, I know we were all off track, but we need to talk about that audit just to finalize it. This was the year after COVID. So this was, like 22 it might have been, I'm thinking.
I think it was 21.
Okay.
21.
And we haven't seen another one like that. I thought we was going to get a bunch. But
No.
basically, Stacey did all this work, validating all the medical, got all the receipts for the medical, got all the
Again,
receipts for the
Trying
contributions.
to avoid being blindsided.
Yes.
I don't like being blindsided.
Pulled transcripts, looked at
Yeah.
wage and income transcripts to make sure it wasn't other wages. That's what I thought. I'm like, it's a nurse. There's 1099s that wasn't added to the return.
Something
They're saying
wasn't
Schedule A.
Yeah.
But when we get in there, they're going to hit you like, where's the Schedule C that's
Right,
not here?
Right.
And Stacey went through all this work pulling together the medical, the contribution, which is not stuff that we normally do. Normally the audits were in their LLCs, their S Corps, their Schedule C audits, their 1120S audits. They're not Schedule A audits. So I was just worried this was a setup. So I went with Stacey to this audit. Stacey got this stack of all these receipts. I mean, for the people listening, the stack was like a foot thick. I mean, it's like
Okay.
4
For
folders.
the people listening,
A foot.
Layton exaggerates sometimes, and it was not a foot. I don't know who you thought would carry that in
Stacey
there.
was carrying it.
No, okay. So again, it was not a foot, but it was several files.
Yes.
I wanted to be prepared just in case, and
So let's walk through that audit real quick. So we sit there, and we're going to jump right back on topic. So we're sitting there, and, the way audits work is when you have a professional representing you, the taxpayer was not there. You don't bring her along. Just me and Stacey. We're meeting at the IRS office, meeting with the agent at the office, and young kid, like fresh out of training. I mean, he had to be like 25 or something like that.
could have been 30. Could have been 30.
Okay, yeah. I mean, he just look young. Anyway, so, mannerisms, looks, young kid. And he goes, all right, so we're looking at the property taxes. And I'm like, yeah, we are. Okay, and we're going to look at this. Yeah, that's what we're going to do. Okay. And he goes, so do we have receipts for payments? I was like, yeah, no, we have a 1098 here from the bank that shows
Right.
what was escrowed, what was paid for property taxes, what was paid for interest. This is what's on the tax return. He looks. Now, wait. Before we did that, we went through all the normal questions, which is,
Right.
Does she have a safe deposit box? Does she have any income that she's making that's just cash? No, no. Does she receive income from other sources? No. Does she belong to any board or organizations? No. So we went through all those questions. And then what we did was he asked about the property tax and interest, and it's like, boom, here's that 1098.
Right.
So I'm looking at him at this point.
And that was one of the items on the document request to begin with anyway.
True.
So we had that, plus the prior year return
Right.
documents.
And then
Yeah.
Stacey goes to grab the folders that's like foot deep with like all these medical expenses and these contributions. And I'm looking at the kid. And he's looking at the 1098. And he says something like, yeah, this all lines up. And at this point, Stacey's pulling this stack up from her foot. And I
Wow.
grab her knee.
So crazy.
And I squeeze her knee, which is like, put that back down. Don't even touch that. Let's just hold on a second here. Let's see where the kid's going, okay? He goes through the 1098. Then he goes, okay. So we're going to take a look at medical. Yeah, all right. We have all the medical receipts right here. That is actually a little bit more than what I think on the return it was
Right.
like $7,000 in medical. That was like her and the 3 children all together for the
Right,
year.
right.
We had like maybe $8,200 in medical, something like that. And I'm like, we have all the medical receipts here. And he says, okay, well, I'll just do a sample of it. It's a sample because we also, when we go into our audits, we have what we call our audit report, which is basically a replica of the return. It has the Schedule A items on it, and then we have a spreadsheet next to it that ties out every line on that Schedule A. We really only do that normally for Schedule Cs and 1120Ss because I'm tying out revenue and expenditures for business. But because this was a Schedule A audit, we just modified to say, okay, medical, property taxes, C1098, interest, C1098, contributions, see these couple of receipts right here.
Right.
And then non-cash contributions, we only took $500 anyway. There's no
Yeah.
receipt needed. And I had a list of all the medical expenses on a spreadsheet. And he said, okay, let's just sample that. So he picked out like 4 of them, I believe, right? Let me see the receipts for these 4. And Stacey whips them out. Wham, 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 wham. There you go, right? So the kid's sitting there. He's looking boggled like, damn, they got everything. So Stacey has like 8 more folders she's pulled. I don't know what the hell's in those folders, but I grab her knee again. Stop. Just put that stuff down. And he goes, well, yeah, looks like everything's in line here. I guess she satisfied the requirements. So I'm looking at him and say, okay, so we're talking no change. No change audit.
No change.
Yes. can we have the supervisor sign that, please? Because I'm thinking there's still something that we're missing here. Something's about to pop out the box on us.
Yeah.
And he goes, yeah, I'll get it signed right now. And he goes, do, 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 do. He get that thing signed, come back, we grab it, run out. And I told Stacey at that point, I was like, listen, if we get a couple of these every month going forward, if this is the type of audits that they're going to pull now, and these are the folks we're going to have to deal with, these are the new revenue agents, oh, God, listen, I'm buying my boat. Oh. That was the thought. I'm buying my boat. Okay, all right.
Okay. So
that was a great audit, though. That was not an atypical audit, though.
no, it's not an atypical audit. And the other thing is, I think it's worth mentioning that it did happen very shortly after the IRS opened up after COVID.
Then they hired all those people and trained them like 6 weeks.
Yeah, that's. I think that had a lot to do. That had something to do with it.
Yeah.
But I'm really not sure why they picked her anyway. It was
an odd one.
It was odd.
But that's a great story. That was a tremendous win, and that was one that I honestly wasn't certain about because it didn't make sense to me. The audit didn't make sense. But either which way, that's how that went. All right, so I know I shouldn't have been in that story, right? This is going to be a hard episode because this is what I'm going to do the whole time. Stacey's going to try to go through, and I'm going to keep pulling up these little odd audits we had.
He's going to be like, oh, remember when?
That's it.
Yeah.
Okay.
So, okay. So anyway, that's the purpose of an audit. This is why I have my notes, because we go through that, and then I'm like,
what do we do now? Okay.
All right.
Now you're back. All right,
so
segment one. Here we go.
Different types of audits that there are. Different types of audits that there are. There are mail audits, office audits, and field audits.
We don't see too much of the mail audits nowadays.
Not anymore. There was a point where that was the thing.
And I think it's pretty much half and half between the field audits and so field audits, which means we bring them out to our office and we have the conduct the audit there, as opposed to in the IRS office.
Right.
I believe most times when it's when we have revenue agents attached to this, we have more of a field. They come out to the office. When it's the revenue agents and it's an audit, normally we're going into the IRS office. Now, that's not a given. That's just our history.
There was a point where it seemed like we would have a choice, like after we'd be talking to them and they're like, oh, well, instead of y'all coming out here, I could come out there. And I think at the time it seemed like because they'd have more room to spread out and have access to us if they have questions.
Well, you're probably just thinking about the Cherry Hill IRS office when they moved a few years back.
Yeah.
But I think in general, most times, the ones we have, not saying it's conducive of all audits, but normally revenue officers, they come out to our location. Revenue agent audits, we're going into the IRS.
Okay.
Yeah. So office audits versus the field audits. And a lot of times with field audits, we'll bring them out to the office, but let's just say the client has a plant or an office location, and or if it's a person that has real estate. When we had the guys who had all the real estate properties,
right?
And the revenue officer wanted to actually drive around and look at the properties, and it was like, yeah, do that on your own time. Right? They do that on their own time. We're not driving around with folks looking at properties,
right?
Looking at windows and whatnot.
GPS is alive and well. So they can,
but if they need to see the location, that happens. We do have occasions when the revenue officer wants to go to the location, and we will do something along the lines of shut it down for a half a day.
Right.
Yeah. So none of the employees, nobody's there to go through the location with the revenue officer. But those are the three: mail audits, office audits, field audits.
Yes, and in all cases, they're going through the documentation that they need to verify that whatever was presented on the tax returns was accurate. So if it's at our office, and typically we have everything there. If it's the field, if it's going to their office, that means we got to bring everything over there as much as we can.
Yeah, but normally we'll have all of the accounting documents
Yeah.
and the database and financials at our office. And
Right.
there. So
Okay.
common triggers, right?
Common triggers for an audit. Why did they pick you? Okay. That's always the thing. I have a few notes here, but I think we have more examples.
Oh, why?
No, I mean, I have a
Push
few
to
notes
me,
here.
so it's,
No, I didn't.
it's
Not yet.
always-
I
oh.
have, not yet. So the couple things that I have are excessive business expense deductions,
excessive,
and
like Amazon.
business expense deductions. People sometimes inflate their numbers
We are not
unnecessary.
implying that Amazon inflates anything.
I'm not saying
I just threw them out because
I
they
see.
run a loss. That's the
Yeah.
use. So
Yeah.
go ahead.
rental losses that can be excessive. And then the earned income credit, that is something that the IRS pays really, really close attention to. They spend a good amount of resources trying to manage that and trying to limit the amount of, limit the number of people that shouldn't be filing that for that credit.
Let's
that
take
still
those
are.
a step at a time. What was the
Yes.
first one you gave?
Excessive business expense.
All right, so
That's-
excessive business expensive. So, a lot of times those are Schedule C audits. So those are LLCs or sole proprietors. And a lot of times what you would have is you have a W-2 wage earner. From what we see, the clients that we get in our office, not indicative of all taxpayers or all audits, just what we see in Jersey. Most
And
times,
I think it's also worth mentioning because we do end up talking to these revenue officers, these agents, and we have a dialogue about whatever return that is being audited. And they have communicated to us that someone that has this scenario that you're talking about is something that they would be paying close attention to.
so we're talking about individuals where they've had 5-6 years where they run significant losses on a Schedule C or 1120 SK ones that have losses
be.
that's coming through, flow through. But they're normally wage earners. So let's just say they have a W-2, they're making $120,000 a year, and they have a ice cream business that has a $50,000 loss for the last 6 years.
Every year.
That reduces
years.
their wage income from 120,000 down to 70 every
and
year.
coincidentally, from their wages, they have very little taxes withheld throughout the year.
Oh, good Lord.
So,
We're jumping into all, okay.
I'm sorry. This is
Let's not touch that one.
okay.
Let's not touch that one. But basically, they have excessive losses over a period of time. And if it's real, it's real. Okay? There's no problems there. Listen, if you are in business to create something special for your family, okay, and you have a business plan and the purpose is to turn a profit, there is nothing wrong with that if you have losses getting started, all right? Even if it's 5 years, 6 years, 7 years. The only thing that means is you need to have good documentation.
Does.
You need to have an accounting system in place. You need to be able to document all the expenditures that you're writing off. That's all it means.
Yes.
Well, we're kind of jumping that on tippy-toeing around is like hobby laws, which is,
Yes.
this is when you get audited and they determine that your business is not a business, it's a hobby. So you get taxed on all the revenue that you might make, but you don't get to write off any of your expenditures,
Not beyond zero.
That's it. So, one of the big things with hobby, and that can't be an episode in and of itself. It's not enough meat there. But one of the big things how you get around an audit where you're being dinged as a hobby is to show that you have a plan in place to turn the company around. There is a business plan. There is a strategy. You have accumulated losses over these particular years. But in the next 3 years, because of the way you're positioning yourself, because of the contract you're going to qualify for, because of the market share that you're going to grab in the, jurisdiction that you're in, you're going to turn a profit. You get away from hobby. They can't hit you with hobby tax that way. All right. Maybe I shouldn't have said that quite that way. They can't hit you with it. But you can show that this is not a hobby. You are in business to create that entity. Yes, and to earn revenue. All right. What was the next item?
The next item was rental losses.
Rental losses. Same thing with rental losses. The big thing there is, if you have the Schedule E's, you have the rentals there, your property taxes, your interest, your insurance, those are givens. Your rental income, given. Unless you're understating your rental income. We've had audits with that before. That was in the past. It was Connecticut audits mostly where you had that renter's credit or something like that. So the people who were renting, they had a renter's abatement credit, and they would file those returns showing how much they paid in rent for the year. And then they would cross-check that with those Schedule E's, which would show considerably less rent for the same unit. So those audits, those were revenue-based audits for those rentals. But in general, when you're talking about the expenditures for the rentals, it's really just your repairs and the supply lines. Those are the two that are normally abused a bit. All right. And those are the ones where you need to have really good records. So all the repairs that you did for the year that's in there, all the supplies that were purchased, have receipts for those. We had a couple interesting audits in the past. We had this one dude who he was a contractor, and he had his own rentals, and he invoiced his own company for those repairs. There was never any actual checks passed between him and the companies. He just had repairs on there, $22,000 for the year, and invoices to his other company, but no checks that ever passed. That was a very, very interesting audit. We didn't do too bad with it, but that was challenging. So you want to keep very, very good records.
Yes. The other thing is, I think, depending on the type of expense, it might, if it's a capital expenditure, I think sometimes
you just need the receipts.
You need the receipts.
You just need the receipts. That's it. Do not try to estimate what your time involvement is and try to, give a price for your time and put that in it. Don't do that. All right. Car and truck is another one. Having a mileage log for the rental and for the small businesses, that always come into play.
That helps.
That's a pain in the butt, especially for our real estate professionals. Oh,
right.
my God.
There are all these apps out there now to make that a little easier. If you end up normally claiming a decent amount in mileage, it's really worth it to utilize that.
Yes, because what happens if you don't do that is, we'll take like a landscaping business that we had an audit for, and they had like 4 trucks, and we literally had to go back, use an Excel spreadsheet, and build a mileage log from all of their clients. So going from their main location to each client, and then back, and then
Just
places
think about
to
their
dump.
daily schedule.
And we had to rebuild that. That's
For the week,
Yes, and we had to do it for the year.
For the year.
For a couple years.
Yeah.
And that is.
I think they
took
took a sample after a while, right? After the first couple.
We had to give full mileage logs. Every one of those audits, we had to do full mileage logs. So it was what it was.
Yeah.
All right, like I said, this episode is going to be horrible because I'm jumping all over the place.
Okay.
I'm going to stop and I'm going to let you.
So
run
one
through
other, I think,
the actual script.
those are the 3 things that I had here. I wanted you to talk a little bit about how it might be that there isn't anything specific with that particular return, but maybe a related return.
Got you. So how do these audits get triggered? So there is the random audit. You got picked randomly, and you always hear that. A lot of times what we'll see, this is with the small businesses, okay? So let's just say this person that comes in our office is a HVAC contractor. And one of the companies that they sub for gets audited. Okay? They audit that company, and they go through all the checks that were cut. Now, the client who walks in our office that needs help, that's getting audited, they are a business. Okay? They are incorporated. So they didn't receive a 1099 from this other company. They just received the checks.
Mm-hmm.
But this other company that they work with, they got audited. The IRS, that agent, went through all the checks cut to all the independent contractors,
Okay.
and then they compare that to those independent contractors' return. Mm-hmm. And the person that's sitting in my office is the one that understated that revenue that they made. Okay, or they did not file a return showing, and now they get picked. So they got picked from an audit because somebody they were working with
Got audited. And
And
the IRS basically took
cross-referenced.
those, now has a new hit list
That's it.
of people to check.
Mm-hmm.
And,
There you
and
go.
that's it.
There you go. And that's how we see them.
Mm-hmm.
So a lot of the audits, and I don't want to say a lot because I don't have the evidence to prove that, but my gut is a lot of our folks that walk in the door, the small businesses, especially the contractors, construction ones, they got picked up from audit because somebody they were working with was audited,
Right.
and then the light was shined on those.
Right.
Yeah.
Yeah.
I don't know if that was helpful or not.
I think it's very helpful.
Maybe?
Yeah.
Scared the hell out of everybody.
Well, and the question was, and the topic is, why did I get picked? Why my return?
Yeah.
And so, in trying to really shed some light on that.
So
Yeah.
some of your
Anyway.
triggers there, you have, significant discrepancies between income and lifestyle?
That is, I actually feel like that's further
Oh.
down. Yes. Yeah. No.
That's
You're
common
right.
triggers.
Yes, that's it.
So we've only had that one. I've only seen that one time. And when I say I've only seen that one time, we had one guy come in, and he was a truck driver. And, he filed returns in, I don't know, basically his lifestyle did not match the returns. I remember having the revenue officer in the office, and we were talking, and she said, I went to serve them with some papers, and they did not answer the door. But as she sat in the car, she seen them, afterwards come outside, get your
Peeking.
papers. But she made the comment, she was like, very beautiful house, probably an 8-car long driveway with 2 statues of tigers at both ends.
At the end?
Of the driveway. And I'm sitting here like, dang.
Right. That's all you can say.
Look, I don't know. Maybe it was his daddy house and he in here. I have no idea. But
Could've been.
yeah, that's it.
Could've been.
We're not going to all that. But
know.
unless you were going to throw out something like, other money's fraud, whatever. But all that being said and done, that he was filing returns as a trucker. I think showing like $20,000 net a year, or for like $60,000 gross. But
Right.
he was living in like a $800,000-$900,000 home.
Right.
But all that being said and done, there's nothing wrong with that, okay? He wasn't married. Spouse could have had considerable, the significant other could have had significant income. I don't even know what
She
you
could
call
have
it.
had disability income, veterans
Now, I don't
income,
know you're going to
anything.
have disability income and have tigers sitting at the end of your driveway. But
There could have been other types of non-taxable income.
possibly.
So,
Either way,
I don't know.
the one thing is he got picked up one way or the other
Yeah.
for audit. And then when she went to go see that house, that intrigued her.
Mm-hmm.
And like I said, I didn't engage in that conversation. I was like, "Oh, really, tigers? I don't really care about that."
Right.
Unless you want
Like,
to
you
make
know.
that a point.
Right.
Where's this other?
I mean, like,
income?
you haven't been out to his house, so you don't know.
Now, all that being said and done, there was additional income that was not reported on that return, and that was the big to-do.
Well, that was the whole thing.
That was the whole thing.
That was the whole purpose of her being
I think there was
involved.
like almost $300,000 in
something
income that was
ridiculous.
not reported, but there was no jail time or anything like that. I mean, it's just
They just adjusted their return.
that's it. wasn't fraud. It was just tax avoidance, I guess. You know, but
Yeah.
just because he had tigers at the end of the driveway didn't necessarily mean. You know, let's just leave that alone. Let's go on to the next, the next one.
To piggyback on that, though, I do want to mention things that get picked up for audit, and it may. Sometimes I see individuals who are filing as single or head of household, and or not. I mean, maybe they're not, but by the time you look at whatever they're paying for daycare and their charitable contribution, so that kind of goes with the next one, large charitable contribution. You know, and it's like, you know, and I'm looking at the mortgage interests and property taxes, and that's just the interest in the property. That's not the full, you know.
So you're going back to lifestyle. Like
Yes.
lifestyle can trigger
Yes.
the audit. That is
And
true.
it can.
I don't know, honestly, how that just triggers. Normally, there has to be other income revenue that has been understated.
That's right.
Okay. And
Right.
then they start looking at these other pieces.
Right.
But I don't know that there is a direct correlation. You know, an individual can have family members, parents helping them
Right.
pay this or pay that, or, you know, maybe.
You
they're-
could.
Yeah.
You
So
very easily could.
that's it. You
You
know,
know,
that doesn't
I
mean.
think where it comes into play, or at least the few times that this came up with an IRS agent or auditor, is when it impacts the credits that they're able to take. So if they're, you know, so when if that's a thing, then it can.
Yeah, that's a touchy one right there. All right. So
And I'm
I
only
got it. So
mentioning
you're going
it because it was stated.
right, and you're going back and saying, okay, are the dependents they're claiming, should they be claiming them? Are they providing more than one half of the support for the dependent? That is a different type of
It's a different
audit.
type of audit.
Yeah,
it
and
is-
that's not
But it's-
something.
Right. It's different than did the business owner
Right.
report all their income and expenses correctly, or the rental property owner, you know, record all of their transactions for their property
Right.
correctly.
So
It
now, wait a
is-
minute. Now, when that came up with you, was that an actual audit?
Wasn't it audit? It was. It was a letter.
There was somebody
It was
they
a
were
letter.
being denied the credits, right? Because they could not show that they provided support for the dependents.
So there was a letter that was sent out asking for additional documentation.
That's not an audit.
No, it's
That's not an audit. Okay, so yeah, we're mixing two
Mm-hmm.
things here. That wasn't an audit. That came down to the dependents and the support and all of that. But yeah, that's a different episode. But that wasn't an audit, though. All right.
Fair enough.
So, but when we're talking about the audit, normally it's when we see them, they're small businesses. It's the
Mm-hmm.
revenue, it's the expenses, real estate professionals, the real estate, you know,
Mm-hmm.
losses that might be sitting there on the Schedule E's.
It could be
And-
high income earners as well, too. So sometimes they just kind of eyeball it,
True.
but usually that high income is
Right, but when you're
on the
talking high
Schedule C,
income,
yeah.
no, not Schedule C's, not always.
Yeah. Hmm.
Sometimes it'll be the stocks, and cryptocurrency. We have the audits with
There
the
is that.
cryptocurrency.
There is that.
Okay, cryptocurrency. We need an episode just on cryptocurrency. That
We
is
do.
a mess.
It is.
But you know, we've in the last couple of years, we've had maybe a half dozen audits just on cryptocurrency, and I would say those are still high income earners.
Sure.
They would fall into that category. But basically, the IRS is seeing the returns of coming back from the cryptocurrency, but they don't see the transactions going in. And
Right.
yeah. Now, I don't believe, I guess we can throw those into the category of audits also.
I was about to say, I think those might be letters as well asking for additional documentation.
That's it.
It's interesting because when clients get those letters, they interpret it as one and the same. I'm being audited.
Right. So
And
let's focus on business individuals then,
Okay.
because that'll be easier. We won't jump all over the place with the different letters and individuals needing to validate the crypto earnings. What was the actual gain as opposed, and also folks claim independence, but they're getting
They need to
support
validate
from
that.
family and other individuals, so they might
Right.
not have the right to claim independent. Let's focus on the business, revenue, expenses, rental, and then we could probably
Sure.
really pinpoint this
Okay.
episode.
All right.
I knew this episode was going to be bad. I'm so sorry. Anytime it comes down to what I do, it's going to be all over the place.
You're going to be all right.
Uh-huh.
All
So,
right. Okay, so I think we've hit the triggers, I think.
the triggers, right.
Yeah, I think
so
we hit those.
let's hit the response.
Okay.
Basically, you get the letter. Let's just say you're a small business owner, and they want to review all of your Schedule C expenditures. Okay? You'll get the cute little letter, and it'll say, we need you to, all the receipts for advertising, independent contractors, office expenses, your mileage log, your, other expenses, your meals and entertainment. And you have that now, and now you need to validate all of these expenses you have on the return. What you do at that point is you start gathering all of your bank statements, all of your credit card statements for the business, all of any other receipts that you might have, all of the receipts that you have, all right, that are on those bank statements, but maybe if you have some that are cash that are not there, you start gathering those documents. So what we do in-house, the way we approach audits, not saying everybody has to do this, but the way we approach it, and we've had tremendous success with this, and my Donald Trump voice, but tremendous success with this here. So
Everybody loves it.
everybody does. That's it. They all love it.
I love it.
So with what we do is we have what we call our audit pack. And basically, it's every line on a Schedule C, on an Excel spreadsheet. We list that out. We pull together a general ledger that lists every expense that they had for the year. So a lot of times what will happen is, folks, let's just say you did the return yourself. They don't have an accounting system. They just have a really good idea of where all of their expenses were. I'm not saying they made up all their numbers that are on the return, but they got relatively within reason what they believed the number should have been from their own records. We go through the bank statements, we go through the receipts, and we generate each one of those line items. So that when we're walking in that audit, I'm like what Stacey didn't begin with all them, folders for just medical and interest and property taxes, we have literally a folder for every item. So one for advertising, one for independent contractors, one for office expenses. We have all the receipts in there, and we have a general ledger detail report that's on the top that says this is what was on the return, this is what the receipts add up to. And when we walk in there for that audit, normally I give that agent this audit report that pretty much says there was $240,000 worth of expenses listed on that return. Per the receipts we have, $241,000, $243,000, $238,000 if it's slightly lower. But we have the receipts to back up these line items. Now, there'll be lines that we can't back up,
Yes.
okay?
That was the next
And there's
question.
never a mileage log. These clients never have a mileage log. We always have to rebuild a mileage log. But basically, when you're walking into that audit, they have the 6, 7 items on that Schedule C that they want to see proof of.
Yes.
And we kill those items. You line them up perfectly, give them the receipts. Sometimes if you're missing something, let's say you're off on an office expense line or the office expense line, and let's just say they had $32,000 in there, we come up with 24, 25. Okay, we're going to take a hit there, but we're being upfront. We are giving them this artifact that says we wrote off 32 because overestimated a few things, or we had some cash receipts the cash payments that we don't have receipts for that we're still working on, but we have 25, and the agent will automatically say, well, you put 32 in there, but you got 25. You got 25. Boom. So you just lost that $7,000. But what we can normally do in those scenarios is there might be other line items that were understated. They might have had in on the travel line, $2,000, but we actually go through True Travel, and it was $4,500, so we picked up $2,500 over here. That's how we try to offset. But when we walk into that audit, we have the audit pack, which we're going to actually provide a sample of, a PDF of. Look at Stacey eyes getting big, like, we're not giving them this. Okay, it's not like secret sauce or anything. It's just an audit pack, but basically it's an outline of what we use when we go in there to set the terms of this engagement. We're walking in to this audit. We're not going to BS them. We're not going to give them some cute story. You want to see line items? Here's your line items. Here's your receipts. This is how they were calculated. If certain things were wrong because, the accounting system wasn't in place, that's fine. If we lose a little bit on one line item, I just want to gain it back on the other lines that we have.
One thing, if I could,
Sure.
I think it's worth mentioning that you going through the steps that you just outlined, there's a reason behind it. Whenever there's a document request from the IRS or if part of an audit like this, like that we're discussing, whatever you're providing needs to be organized so they can read it and they can go through it. We have seen individuals who have attempted to do it on their own, and they said, well, I'm going to give you the same box that I gave them. Right then and there, before I even see the box, I already know what the problem was.
Yeah.
Okay? They are not going through and sifting through all of your receipts for over, let's say it's a 2-year audit,
And they do year by year, but no, they're not
right,
going
they're
to.
not doing that.
They're not going to go through all that. They're going to ask you to organize and give them the receipts for each line.
Or they will say, I'm sorry, we didn't receive anything, and then
Zero off the line.
nicely remove any credit for that line, right?
Yeah. So that's the purpose of what we call in-house our audit pack. It's basically an organized document. It organizes. It's a general ledger. Okay, that's what it is. It's general ledger, and it organizes all of the expenses by line item.
So
normally
the
we walk
onus
in
is on
there-
you.
Right.
The onus is not on the IRS. Because we've had some people say, well, isn't it their job to do that? And it's like, no, it's not. It's not.
So what happens is this. We go in there. Let's just take something simple like advertising. Let's say they had $9,000 in advertising. And that $9,000 was $1,000, $500 a month they paid to a web company and some other advertising. And let's just say in the audit pack for that particular line, they paid 8 different people. That's how they came with the $9,000. The auditor normally take a sample of it. If it's only $9,000, they might look at all the receipts. But if it's a lot of different individuals that were paid, they'll take like a dozen of them just to verify. So we give them a general ledger, which is an Excel sheet that says they paid these 30 people this $9,000. They'll pick a dozen of them and say, give me these 12 receipts, okay, and show me where they were paid on the bank statement or credit card statement. And then that's my job. Now I'm sitting here, a little irritated, but that's the job now. They didn't pick 12 of these.
Right.
Here's the 12 receipts. Okay, now show me where they are on a bank statement or credit card statement where they were paid. All right, here's the bank statements with them highlighted. Well, they're not highlighted, but I'll highlight them while I'm right there. Give it to them so that he or she can very easily see these are the line items. And what we're doing right now is we are showing really good due diligence. We are showing, that we are competent and you're building trust.
Right.
It's the key. You're building trust. Listen, you have a lot of folks who they talk about how to go through an audit, and they give classes and all that. I'm not saying that's all not true, but I'll be honest with you. I've never walked into an audit and gotten into an argument with an agent or an officer or IRC. Like, well, this is regular and ordinary for a business expense, and then start spitting the IRC code. That's not what happened. Normally you build a line of respect, okay, with that agent, with that officer. Hopefully it's somebody you worked with before, and we're fortunate a lot of times we'll see the same agents and all because we're in the same area, but we'll see the same agents and officers, and they understand what type of work we're going to bring. So we won't get that crap.
Yeah.
But all that being said and done, you give them that audit fact. They pick a line. They pick a dozen receipts. They want to see the receipts. They want to see it on a bank statement, on a credit card statement where it was paid. And that will satisfy that line. That
Right.
line is closed.
Right.
So let's say you had 6 or 7 different lines they picked. That's what we're doing for each one. The most work always goes into rebuilding the mileage log because our clients never have a mileage log, like ever. Like,
I wonder if
honestly,
that's coincidental.
ever have
So
a mileage log.
the clients that do have mileage laws, they're not the ones getting audited.
Yeah, that's probably true.
I wonder if there's no,
No,
but we
there's
don't.
no way they-
I
no
know,
way
because
they would know.
we don't submit that along with the
Yeah,
return.
there's no way they would know. But
Yeah.
all that being said, none, they never have a mileage log. And to be honest with you, we don't mind it. That runs up that bill. There's a nice bill that comes with that. But all that being
tedious
said and
as hell,
done,
though.
tedious. Oh my God. But we have really wonderful accountants
We do.
that do all that.
We
Yeah.
do. We do.
So, all right. That
So-
is normally what's happening during the audit. You are building, trust and understanding in your business and in this conversation you're having with this agent, this officer. You always got to remember, if you go into one of these audits on your own, they are not your friend,
Absolutely not.
okay?
And I don't care what kind of lovely conversation y'all
Yes.
end up talking about, how maybe you have kids the same age and, and I understand and all that.
They don't.
Literally, they are there to get the information they need to further what they're trying to do.
Think about it as if you ever went into a therapy session with a psychologist and, they sit back and they listen for key words from you, like
Wow.
something that might sound suicidal, I don't know, or just something that triggers something that they're looking for, The same thing in this IRS audit. You'll get into personal conversations and, you'll say something like, oh, yeah, my kids every year go to some Jack and Jill event in Hawaii. And it's like, oh, yeah, my kids are in Jack and Jill too. But they don't go to Hawaii every year, okay? And the big thing is, that's just a little bit more information than what's needed. Stick to the script. You're there to provide information on the company, information on items that they want to verify, have lovely little conversations in between, but stick to business.
Yeah.
That's the best advice you could have there
Yes.
during the audit. But the point I was making earlier is, you don't normally get into any back and forth arguments with the agent or the officer. You be respectful. They're there to do a job just like you have a job to do. They're there to do a job. Just give them the information that's needed, required. If you can't back up a line item, you can let them know. I put on here $7,200 for this particular line item, but it was actually only $5,200. All right, and that's because there was an accounting error. That extra $2,000 is not there; it's sitting on this other line. Now, what's happening is you might be bringing more items from that business into play that needs to be reviewed now. But it's worth it. It's worth it. You're not going to get dinged for having accounting errors. You have money in the wrong buckets.
Right.
Oh, I think we're all over the place with this.
No, I think we're okay.
I don't know. What do you think, LJ? Rough episode?
Spin back and forth. I think you're sold.
We just
Okay.
had the wise words from the future CPA over there, Layton Jr.
I think in reference to presenting the documentation in an organized fashion, building trust, and establishing yourself as entering into these discussions as a professional. The other thing is there may be points that you disagree on.
Sure.
It's possible that you present something that you believe, that you counted on your return, and they're arguing with you about the validity of that.
True.
There is there are options for if you don't
I mean, you
agree.
can always, if you don't
always
agree, you can
appeal.
always request a meeting with the supervisor.
So there is, I know we had one example of kind of a blaring example of why you want to avoid cash transactions and
Yes.
how that can really derail any efforts that we have, at least on those particular line items when it comes to an audit. You want to share that?
So basically, what we're really saying is, with this example, is we had $260,000 that was paid out in cash, no W-9s, no documentation, just receipts signed every week with individuals just with 5 names that did not have an I-10, did not have a Social Security number,
Right.
could not be proven who they were, what they were paid for, and that taxpayer lost that expense because they could not prove it.
To give context a little bit to it, there are a fair number of business owners that do employ individuals that, might be just the line of work that they have where it's questionable whether the workers that they have have gone through the whole citizenship process. Maybe many of them have, but then they have a cousin or a sister or something like that.
Okay, but even when we're dealing with that,
Yeah.
it doesn't matter. If you're
No,
here in the
but that's
U.S.
how
and
this-
you're working,
Yes.
you're supposed to file a return.
Right, but they're not always aware of that, and they
Right.
get a little, squeamish about it. And the business owner not wanting to lose the
The
ability.
good worker.
Exactly.
So what we're
They're not
really,
sure how to handle it.
right, but what we're really saying here is this. We have a client here, okay? Just paint the picture of this client. We have this client. They have a group of workers coming from some area. They don't have Social Security numbers. They don't have I-10s. They're great workers. Problem is they're paying them in cash, and they can't prove that in the audit. Now, they can't prove the cash they paid. Now, how do you get around this? We're going to stop all
There
this
it
other
is.
stuff. How do you get around this?
Yes.
You cut checks to all of these individuals, okay? You give them a check, and then from there, they will figure out how to cash that check. And, that right there fixes the problem, okay? If I walk into that audit and I have a stack of checks that have been cashed by different individuals, those are valid business expenses. That's it.
That's it.
That's it.
That's it.
This is no more of a conversation.
Right.
So that was a painful audit just because
Right.
we could not prove something that was obvious.
Very obvious. And the thing is, it's the building that they were working in, it was a hotel, right? There's absolutely no way one person could do all of the work. So the auditor was aware that this was, and that there had to be help. But without the records,
Without the proof,
without the proof on paper,
it was lost. So, and yes, we did go through an appeal. So when you go through the appeal process, and we were given some back on the appeal. We didn't lose the whole 260. I think through the appeal, we got like half or something close to that, a third. But it's, you go through a normal appeal, which is a Form 203, and you go through the appeal division after an audit. So the reason we went through the appeals is because dealing with that auditor, dealing with that supervisor, they already had set in their mind what this company was, what this individual did, and that they could not prove this line item, even though they knew it was true. They could not prove. This one person did not do all of this work, but did not follow proper procedures. So we filed the appeal, and through the appeal process, it was like almost a year. We did get some of that. Some of that was given back. I think it was a third.
okay. All right. Okay.
Oh, Stacey done lost words on it now.
No,
With a bad
it's like-
example.
I know that I think there was, we had it, at least one where there were, they were looking at bank statements and something about
the transfers between the different accounts, the auditor wanted to look at that as additional income. And it was one or two.
Oh,
and
yeah, I
it
know
was-
what you're talking about.
And it was
That
like-
was a lot.
It was
Yeah,
a
it was
lot.
like $300,000-$400,000. Yeah.
Yeah, but
So,
right.
But, okay, so what happened is there was money being transferred into the business account from personal accounts and from other accounts.
Mm-hmm.
And we needed to validate that was not revenue.
Like paychecks,
That-
like
Not paycheck, no.
compensation
Yeah,
of some
that
sort.
was not revenue. That was, as we said, it was monies being loaned to that individual from family members.
Right.
There was no loan documentation. It was, handshake agreements. But we had to go back, get affidavits done that showed that
Right.
the family members and other friends were loaning that
That
money
money.
to the individual. It was not revenue.
Right.
Yeah.
So, okay.
But
so
that one
was-
worked out well. That
That's
audit
what-
went well. That audit
That's
worked
where
out
I
well.
thought you
Yes.
were going with that first. but
No,
then you-
that first one. No, I'm talking about that was probably like the third audit I had ever.
Oh, gosh.
Yeah.
Wow. Okay.
So, but if you have an issue once you go through an audit, you can always appeal.
Yes.
IRS form 12203, go through the appeals division. A lot of times, we'll have individuals, they'll come and they might have already gone through an audit themselves, and it wasn't very fruitful. And that revenue agent already had made up in their mind what this is, what it looks like.
Yeah.
There's really nothing I can do at that point coming in on the back end to try to fix this. A lot of times you just want to close that audit, close it so that you can appeal it.
So you can revisit it with
That's it.
somebody new with fresh eyes on an appeal.
Yeah, and the big thing with the appeal is you need to be providing new information. So, a lot of times if you're going through an audit and, all of the line items were not presented, but you do have a line item that, there's additional expenses there that could offset, what you're being dinged on, what they're not giving you, you just hold it. Don't even present that while you're in the audit. You just hold that for the appeal because now you have grounds for an
information.
appeal. Yes. All right.
right,
What do you
so-
have here? Tips to avoid audits. Oh, that's interesting. Tips to avoid audits.
Is that what I have on there?
Segment 7, tips to avoid audits. So, let's see. You have one here.
I'm missing a page.
Report all income. So, that's your first tip to avoid an audit. Report all of the income you have. Ensure that income is reported accurately.
Oh, I'm missing a page. I'm sorry.
That's all right. I got it. I got all your notes here.
Okay.
So, to avoid audit, report all your income. That's the first step.
Okay.
Keep accurate records. That's a good one.
Yes.
Avoid cash transactions.
Yeah, so you just went over that scenario.
Avoid cash transactions.
You can.
File on time. File timely. That's a big one there. And you have your double check your expenditures and your revenue. Yes, those are ways to avoid
Yes.
an audit. Sometimes you can't, but being prepared.
Being prepared,
Being
and
prepared.
it's just normal due diligence, not excessively so, but just normal due diligence, like you're trying a little bit.
That's it. So what we'll do is this. We're going to do this episode again. And we're going to follow script the next time. We won't go into all the Layton stories. So,
Oh my goodness! Do you
But-
want to?
oh no, go right ahead. Go right ahead.
Okay. All right. Well, I mean, in terms of avoiding an audit, I kind of thought that we might do another session on just that.
You think there's enough there for a whole episode?
I think there might be.
Yeah. Okay. That's interesting.
There might
We
be.
can hit that.
We'll see. We'll see. We'll
Well, either way, listen, guys, we appreciate you taking the time to go through Layton story session. As
Look,
always,
you were excited to do this, so
no, like I
that
said, and
you
I
can-
did start off by saying this is probably going to be the worst episode, all right? But as always, this information is intended for, entertainment and tax
Information
advice.
first, yeah.
That's it. You should always check with your financial advisors, CPA, your EA, your tax attorney.
Mm-hmm.
If you are concerned about being audited or you have an audit, we would definitely recommend hire a professional. Don't go in
Absolutely.
alone.
Don't go this one alone.
Yeah,
This is
hire a
not
professional.
Not the
you know.
time
And
for
we're
that.
only talking federal audits, too. We're not even talking state audits, okay?
Yes.
We're talking federal, really, business audits. We're not talking like sales tax audits. We're not talking
Right.
payroll tax audits.
Yes.
Listen, if these things do come up, get professional assistance.
Yes.
If you have any questions, you can always reach us at info@Cigars and Taxes. If you like these episodes, please subscribe. And
Yeah.
just remember, this is Cigars and Taxes. So we're talking about audits, and this is how the conversation of audits go in a cigar lounge.
Yes. And there's usually
lots of examples or remember when moments, you
That's
know.
it. That's
so
it.
So now you guys have a
little peek
into
Right.
our world here.
That's it. So what normally happens is we're giving some of these examples of these clients, and then we have the individual we're talking to will actually tell us their situation and be like,
Yes.
all right, well, this is how we would tackle that. That's it. But either way, listen, it's been fun. Thank you
Yeah.
guys. We appreciate you spending time with us today. We're going to redo this episode Stacey way, you know, organized, structure, a little bit less of the Layton stories. Go from there. Take care. We'll see you next week, guys.
Take care until next time.